This is Brian Carlton for ABN Newswire. Mike O'Brien's the Chief Executive Officer of Metro Coal, ASX code MTE. Now, Metro Coal's an emerging Australian coal-based energy company focused on projects in the Surat Basin in southeast Queensland. A couple of company visions, if you like: the export of thermal coal from underground mining, and also getting into what I believe is one of the more sensational technologies in terms of energy generation, the underground coal gasification. Mike, welcome to ABN Newswire. Great to meet you.
Thank you. It's great to be here.
Now, despite the climate change mitigation push, the reality is the world's going to be burning coal for many years to come, decades to come.
Absolutely, there's no doubt about that.
Okay, so how much thermal coal are we talking about? Let's deal with that aspect of the business first.
Our resource base is billions of tonnes. We've got an exploration target as it stands of between 2.5 and 3.5 billion tonnes, and in our view that's really conservative.
Wow, and obviously the location is good in terms of the cost curve, close to infrastructure. There's obviously southeast Queensland is kind of the Australian mecca for coal in many respects.
We are. We're well situated. We're down dip of some very, very well-known deposits in the Surat Basin. There is infrastructure that will have to come in. They'll have to put in the Surat Basin rail link, what we call the southern missing link. And
where will that link up to?
That'll take it from Wandoan up to Banana.
Okay.
And then there's an upgrade from Banana to Gladstone and the Wiggins Island coal terminal that's due for financial close this year.
Okay, so it's a very substantial project.
Absolutely.
Okay. Are you prepared to put some kind of dollar value on it at this stage over the lifetime of the project, which would be what as well?
Yeah, it's difficult to put dollar values on at this early stage, but a mine producing 5 million tonnes of coal a year typically has revenues in the order of sort of 500 million, $500 million a year. So it is substantial.
Potential export markets would be, the usual suspects? Or?
Absolutely. The Pacific Rim.
Okay, well, and obviously China would play a role there.
Well, we're talking to a lot of very, very interested parties, both in India and in China. These people are really hungry for energy, and we may well end up with offtake arrangements well ahead of production.
I'm fascinated by the UCG as an emerging technology. In many respects, the clean coal that we've all been hearing about metaphorically out there in the big wide world, this will be the way to do it. But I get the impression a lot of the time that people think we'll be attaching things to existing coal-fired power stations. But I really do see UCG as the way to do it. What's the size of the UCG resource for you?
Well, again, our UCG resource is absolutely huge. Queensland, though, has a policy where, with overlapping tenements, they have segregated out areas. Now, we have a couple of areas that are extremely prospective, somewhat smaller than our overall tenements, but nevertheless, they'll have several 100 million tonnes of coal in there. So we're well placed to participate in the UCG upsurge, as I would see it. And
the product of that process is syngas?
In the first instance.
Okay, and then you're doing gas to liquid?
That's where we're ultimately heading. That's really where the benefit is for Australia, and that's where the benefit is for Metro Coal.
What sort of investment is generally required to be producing that kind of energy resource?
There's the challenge for us. It is an emerging technology. We are looking at small-scale coal gas to liquid plants, and now those small scale would be small scale in capital as well. If you look at the large scale, then it gets quite scary because we're talking billions of dollars. I expect the market to open up with small scale, several $100 million investments producing reasonable quantities of liquid fuel.
Okay, so we're talking diesel fuel, jet fuels, very high quality, very pure, very clean burning. That's the obvious advantage for the consumer of these energies.
Absolutely, absolutely. But it's important to remember with UCG there is an opportunity to monetize the gas very early through small-scale power generation. So we would expect to move through that phase, small-scale power generation moving ultimately then to liquids.
You're looking at the same kind of markets for the UCG syngas byproducts or the liquid byproducts as your thermal coal?
No.
Would you just say that's a sort of a package deal, if you like?
No, I think that UCG is going to underpin Australia's liquid fuel demand in the decades to come.
So trucks driving around, the cars driving around that were increasingly diesels will be using synthetic diesel fuel?
Yes, yes.
What sort of time frame do you see for that here in Australia?
And I think UCG itself, the process of producing syngas is underway now. That'll get up ahead of steam. And the next couple of years we'll see that, I think, emerge as a credible science or a credible industry. The liquid fuel production, probably a little further down the track, probably 3 to 4 years would be our guess.
How long then till consumers will be pumping it into their car?
Oh, I think within 5 years, certainly. And in fact, if I listen to some of the companies that are in that sphere already, it could be a lot sooner.
Apart from the environmental benefits, is there a cost benefit compared to standard diesel fuel?
There would be. We would probably see that cost benefit translating into profit for the company rather than a discounted fuel at the pump. But who knows?
By the time it gets to consumer usage, is it simply going to be blended in with the existing diesel stock, or will they be sold, do you think, retailed separately?
No, I think it'll be a blend. One does need conventional hydrocarbons to mix in with the converted syngas.
And of course there are chemical processing applications for the liquids as well, aren't there?
Yes, and that's the next step. Further capital requirements, but again further financial reward. We're watching developments in that sphere.
What should investors expect to gain investing in Metro Coal?
They gain two things. They gain access to the very, very strong export coal market, and our timing dovetails in with the provision of infrastructure into the Surat. So the investor comes in there. Because our tenements are extensive and they extend at depth into areas where you can't monetize them through conventional mining, but ideally suited to UCG. So our tenements then are fully utilised and the investor then gets the benefit of that. We don't see it as an either or, it's very definitely an and. The strategies are complementary, the exploration programs are complementary, so no, we just think it gives you double the bang for your buck.
And obviously this is a fairly long-term project for Metro Coal.
Certainly 3 to 5 years, yes.
Okay, and what's the lifetime of the resource, do you think?
It'll extend well into the future, 20, 30 years.
Okay. Thanks for joining us on ABN. This is Brian Carlton for ABN Newswire.